Good morning everyone, welcome to the official YouTube channel of Officers at 24/7. My name is Amanjot and today it's the 12th class of our practice related to the module A of Principles and Practices of Banking. So before starting the session, let me know, am I audible to all of you and the PPT is also visible? Are we good to go? Is everything okay? Good morning Rahul, good morning Vinay, good morning Ananta, good morning Sheikh. Good morning all of you. Let me know, am I audible? Okay. So let's start with the MCQs. The same pattern we will follow. We'll discuss the questions, we will discuss the options, and at the end I will ask you how much you have done correct. Okay. So before starting the session, if you are new to the channel, do subscribe the channel and press the bell icon so that you will get all the notification related to the upcoming sessions. And if you have not downloaded yet the Adda 24/7 application, do download the application. Here you will find the quiz which is really going to help you in the basic understanding of the terminologies related to your banking exam. Okay. Now next thing which we have discussed already, that the English medium batch for your June 2022 target is started from 16th of April, in which we have already started all the 3 subjects in the live sessions, in the live classes. And one important information, as you all know already, that the JAIIB 2022 registration started from yesterday at 6 p.m. onwards. Okay, so we know the registration is already now started. A registration link is now active, so it's a high time to make sure that we are focused in our preparation and we are making sure that we will qualify this particular exam in the first attempt. So to attempt or to qualify this exam, we need a structured study material and update study material, and we have to give the dedicated time period in which we will cover all the syllabus and we will score highest marks. Okay, so this batch is for all of you who are looking forward a dedicated batch in which they do not have to do the R&D and everything will be available, so that you do not have to waste in the researching the syllabus or in research for the topics or the PDFs or the content. So everything will be available in this particular batch. Batch already started from 16th of April. And to enroll in this particular batch, you can go to the Adda 24/7 application or website and you can use a code that is Y496 to get 78% discount on this batch. Okay, now let's start with the term of the day, that was Liberalized Remittance Scheme, LRS. Now abbreviations are also important when it comes to the banking awareness and financial awareness or government schemes. So they can ask you the full form or the abbreviations related to the government schemes or the financial awareness or the banking awareness. So do make sure that you are covering the abbreviations also while you are reading the terms. Okay, so when it comes to the Liberalized Remittance Scheme, LRS, it was launched by Reserve Bank of India. Now LRS was launched by Reserve Bank of India, and why RBI launched this particular scheme? Under the scheme, all the individual resident of our country, including minors, they are able to transfer money or to send money or to remit money in foreign countries in a financial year, that is 2.5 lakh US dollar. Yes, so Liberalized Remittance Scheme is the scheme which allows to freely remit a certain amount of money to Indian individuals in foreign country. So this scheme was launched by Reserve Bank of India. This scheme is for the individual. This scheme is for individuals including minors. Okay. So this is scheme for individual persons including minors. Minors are also included in this particular scheme. Now what we can do here, the individual investors can freely remit money abroad. Okay, they can freely remit money abroad. It means this scheme is related to the outward remittance from the country. The money is going to abroad from India. That's why we are saying this remittance is a type of outward remittance. Okay. Now next thing is, in this particular scheme, how much amount can be remitted by individual? It can be 2.5 lakh US dollar. So in a financial year, for any purpose, you can transfer this amount of money in foreign countries without any restrictions, without any rules or regulations. So this is the freely remit money which is allowed by Reserve Bank of India under the liberalized remittance scheme. Now do remember, this scheme is only for the individual residents. One more thing we have to add here, it is for individual residents, which includes minors also. It includes the minors also. Okay, now it means the minor can transfer money from India to abroad in a financial year, that is US dollar 2.5 lakh. Now the duration is in a financial year, in a financial year, that is from 1st April to 31st March. Okay, so this is the liberalized remittance scheme. You should know the scheme. Now current account transactions are freely allowed here. It means you can do current account transactions without any restrictions, or you can transfer this amount of money without any restrictions from India to abroad. Okay, now let's move forward to the first question, which is asking about that which among the following does not fall under the category of government securities. So which of the following is not a category of government securities? Now when it comes to the government security, Government of India issues its securities to raise money from the market, to get capital when it requires, and to maintain the money supply in the country. So Government of India use government securities to raise money from market whenever there is a mismatch of revenue and expenditure of Government of India. And the second thing is, whenever RBI wants to reduce the liquidity from the market, why? To control the money supply in the economy, then also RBI use the government securities. Okay, now which of the following is not a type of government security? Is it dated security? Is it treasury bills? Is it state development loans? Or is it certificate of deposit? Now what will be the answer of the first question? Do make sure whenever you are answering question, do make sure that you are mentioning the question number also. Okay, and those candidates who are live in the session, do like the session and share with your colleagues wherever you are linked with them, on WhatsApp group, on Telegram group, on any other social media platform. Do share with them the session. Okay, Rahul is saying A, Sheikh is saying C, Ananta is saying A, Vinay is saying C. Okay, see, yesterday we have discussed money market, yes or no? We have discussed what is money market and what are the different instruments of money market. I think we have discussed yesterday or day before yesterday. Okay, no, the right answer will be your certificate of deposit. Certificate of deposit is not a government security. What are you doing? Very good, Gitanjali only given the right answer, that is D option, that is certificate of deposit. Certificate of deposits is a money market instrument. It's a money market instrument. Okay, certificate of deposits are issued by banks and financial institutions. Banks and financial institutions issue certificate of deposit whenever they are required money, whenever they want to raise money for short period of time. Then the banks and financial institution issue the certificate of deposit. It is a money market instrument. The duration for this is from 7 days to 1 year. The duration of certificate of deposit is from 7 days to 1 year. This is the maturity period. Okay, when it comes to certificate of deposit, the minimum amount of which the certificate of deposit can be issued now raised to 5 lakh. Earlier it was used to 1 lakh. So now whenever the banks and financial institutions are issuing certificate of deposit, they can issue the certificate of deposit of minimum amount of 5 lakh, and thereafter multiple of 5 lakh they can issue. Okay, thereafter multiple of 5 lakh. It means in the denomination of 10, 15, 20, 25, 35, they can issue certificate of deposit. There is no maximum ceiling. Okay, there is no maximum limit that how much amount of certificate of deposit a bank or a financial institution can issue. The minimum limit is there, that is 5 lakh. Earlier it used to be 1 lakh. Now it has been changed. Now it is 5 lakh. The minimum amount is same for both the commercial papers and certificate of deposit. Okay. So the right answer will be certificate of deposit. It is a money market instrument, and it is a secured money market instrument because banks and financial institutions are issuing it. Okay, so it is a secured money market instrument. It is a secured money market instrument, and it issued in the form of promissory note. It issued in the form of promissory note. Now, what is promissory note? Promissory note simply means a piece of paper at which one party is promising to another party to pay a certain amount of money on a certain date and signing the document. Okay, and the maker is signing the document. So the right answer will be your D, certificate of deposit. Dated government securities are the security of Government of India, in which the interest payment will be done on the half-yearly basis. It means in a year you will get 2 times the interest payment. When it comes to treasury bills, it is also known as T-bills. It is also a government security in which there are 3 types of T-bills, that is 91 days, 182 days and 364 days. Okay, now state development loans, again a type of security which is for the mismatch of revenue and expenses of the state government. Okay, so the right answer will be your D, that is certificate of deposit. It's not a security, it's a money market instrument. Now next, name the account that is maintained with Reserve Bank of India in which government securities are held. Question number 2. Name the account that is maintained with Reserve Bank of India in which government securities are held. Is it a nostro account? Is it a vostro account? Is it a subsidiary general ledger account? Or it is a escrow account? Which account is it? Question number 2. A, B, C or D? What will be the right answer? Do mention the question number with your answer, okay? Again, a very simple question. To answer these questions, you just have to be the conceptual understanding of the topic. That's sufficient. That is not a very tough questions. These are very simple questions. You just need a conceptual understanding. If one you have to complete the whole syllabus of JAIIB, then you will be easily able to answer these questions. Sheikh is saying A, Gitanjali is saying C, Ananta is saying D. Okay, what about rest? See, the right answer will be your C option, that is subsidiary general ledger account. Okay, the right answer is C. Now, government securities are generally held in subsidiary general ledger account held with the Reserve Bank of India. Okay, in case any entity do not have a direct account with the RBI, they can open a constituent subsidiary general ledger account with banks and primary dealers, or they can convert that account into dematerialized form, or we can say the demat account, which is maintained by the depositories participants, okay, of NSDL. We know NSDL is National Securities Depository Limited, that is a depository of NSC. So first of all, to maintain government securities, subsidiary general ledger account will be maintained with Reserve Bank of India. If in case any entity do not have the direct account with Reserve Bank of India, they may open the constituent subsidiary general account with banks and primary dealers, or they can convert these account into dematerialized form. It means into demat account, which will be maintained by depository participants of NSDL. Now, NSDL is depository that is established by NSE, National Stock Exchange. Okay, so right answer will be your C option, that is subsidiary general account. Now, if we are talking about nostro and vostro account, these are the currency account. Whenever we are talking about the nostro account, what is nostro account? Nostro accounts are the accounts in which the Indian banks having account, Indian bank having account in foreign bank, in which currency? In foreign currency. In which country? In foreign country. When an Indian bank is having an account in foreign bank, in foreign country, in foreign currency, that account of Indian bank will be known as nostro account. Just do the opposite of this in the vostro account. When a foreign bank is having account in Indian bank, in India and in Indian currency, then that account will be known as vostro account. So when a foreign bank is having an account in Indian bank in India in Indian currency, it will be known as vostro account. And when the Indian bank having account in foreign bank in foreign country in foreign currency, that will be known as nostro account. Okay. Now escrow account is a third party account. Escrow account is a third party account which is maintained by the financial institutions on behalf of their two parties. For example, there are two persons A and B and both are trading with each other. A is the buyer and B is the seller, let's say, and they are performing a certain trade. Now both the buyer and seller do not have trust on each other. There may be a chances that the buyer, that the seller has shipped the good and the buyer will not pay the amount of the goods and services. So when these kinds of issues are there between buyer and seller, they went to the bank, they went to a financial institution and they maintain a escrow account with that particular bank. So the bank will be here is your mediator, which is maintaining account on behalf of two other parties to complete their transaction, to complete their trading. Okay, so the right answer will be C option. Loro account is different, that is in which the domestic bank is using the nostro account of another domestic bank to take foreign currencies or to deal with the foreign bank in foreign country in foreign currency. That is known as loro account. Okay, what is loro account? I am repeating again. Loro account is the account which is used by the domestic bank, okay, in which the domestic bank uses the nostro account of another domestic bank to take foreign currency in foreign country from foreign bank in foreign currency. Okay, now okay with loro account. When we are going to do the conceptual understanding, we will have an example of that particular account. Okay, now do make sure that loro account is used by a domestic bank and the domestic bank is using the nostro account of any other domestic bank. That is loro. Now let's move forward to the third question. Who operates collateralized borrowing and lending obligation? Who operates CBLO? When it comes to CBLO, CBLO is a type of instrument which is used under the money market. So CBLO stands for collateralized borrowing and lending obligation. It is a money market instrument. It is a type of bond which makes sure that the obligations of loans, terms and conditions will be fulfilled by the lenders and the borrowers. Okay. Now who operates your CBLO? Is it SEBI, is it RBI, is it CCIL, or is it NSDL? Who operates it? What will be the right answer for the third question? Third is D, that is NSDL. Gitanjali is saying B, that is RBI. Okay. Rahul is also saying that is B, RBI. Vinay is saying C. Okay. Okay, so the right answer is C, CCIL, Clearing Corporation of India Limited. Clearing Corporation of India Limited is an Indian government corporation. It is an Indian government corporation. So CCIL is Clearing Corporation of India Limited. It operates the CBLO. It operates the CBLO. So CBLO stands for collateralized borrowing and lending obligation. It is a money market instrument. It is a short-term money market instrument. Its duration is from overnight to 1 year. The duration of CBLO is from overnight to 1 year. Here the participants can be banks, NBFCs, primary dealers. These are the participants of your CBLO. Now what CBLO is doing? CBLO makes sure that the obligations will be fulfilled between the lender and borrower of loans, terms and conditions. Okay. Now one important thing is that CBLO do not disclose the information about its borrowers and lenders. Okay. So CBLO does not disclose that from whom he is taking money and to whom he is giving money. So this is a kind of instrument which used as a mediator, as a financial instrument which is making the borrower and lender to fulfill their needs in the market. Okay, so the right answer will be C, that is Clearing Corporation of India Limited. That is Government of India's corporation. Now, CIBIL as a credit bureau caters to commercial segment, consumer segment, both or none. Now we know what is CIBIL. CIBIL is the credit rating agency. Okay, what is CIBIL? CIBIL is the credit rating agency. Now let me know, CIBIL as a credit bureau caters which of the following? Commercial segments, consumer segments, both or none. Now who regulates the credit rating agency? If we are talking about who regulates the credit rating agencies, SEBI does that. Credit rating agencies regulated by SEBI. Regulated by SEBI. Okay, Securities and Exchange Board of India. What will be the right answer? A, B, C or D? Fourth is C, that is both. Okay. Now when we are talking about CIBIL, CIBIL stands for Credit Information Bureau of India Limited. Now CIBIL is Credit Information Bureau of India Limited. It is a credit rating agencies which gives rating to individual persons. Okay, it gives rating for the banks, for the financial institutions to decide if they have to provide loan to the public or not. So the right answer will be both, that is consumer segment and commercial sector. It caters the both. Now CIBIL score is of 3 digits. Okay, CIBIL score is of 3 digits. Ayush, this is not a Hindi medium session. Okay, if you are not liking, you can leave the session. No need to disturb others. Now next is, we have discussed what is CIBIL, Credit Information Bureau of India Limited, that is CIBIL, and all those credit rating agencies are regulated by SEBI, Securities and Exchange Board of India. Okay, now next is, a depository receipt is a negotiable financial instrument issued by a bank to represent a foreign company's publicly traded security. When we are talking about depository receipts, we have discussed there are 3 types of depository receipt, that is ADR, American Depository Receipt, there are GDR, Global Depository Receipt, there are IDR, that is Indian Depository Receipt. We have 3 types of depository receipt, and these depository receipts are the negotiable financial instrument which is issued by a bank to present or to represent a foreign company's publicly traded security. Is this a statement is true or wrong, or true or false? What will be the right answer, true or false? Fifth will be your true or false. Gitanjali is saying B. Sheikh is saying B. Okay. Rahul is also saying B. That is true. Okay. So the right answer for this question is true, because this depository receipts are the negotiable financial instrument which is issued by a depository bank. It is issued by a depository bank. It represents a foreign company's security in another country. Okay, for example, let's say we have a TCS. TCS is our Indian company. Now TCS wants to issue its shares in the foreign market. What TCS has to do? TCS has to go to the depository bank, and now this depository bank will issue the security of TCS in the foreign market, and that will be known as ADR and GDR. When TCS is issuing its share only in America, then it will be known as American Depository Receipt. When TCS is issuing its shares in global market except America, you have to exclude America here, except America, then it will be known as your depository receipt, which is GDR, Global Depository Receipt. When we are talking about IDR, IDR stands for Indian Depository Receipt. Now Indian Depository Receipt is the receipt in which non-Indian company is issuing its shares in Indian stock market. Okay, so in ADR and GDR we are going abroad to raise capital, and in IDR non-Indian companies are coming to India to raise capital. Okay, so the answer will be true. Next, to control inflationary situation in the economy, RBI can increase which one or more of these monetary tools? What will be the right answer? Question number 6. To control inflationary situation in the economy, RBI can increase which one or more of these monetary tools? Now these monetary tools are maintained or formulated by Reserve Bank of India under the monetary policy, that is SLR, CRR, bank rate. So what will be the answer? CRR, SLR, bank rate, or all of the above? what RBI should do to control the inflation in the economy? Amit, do mention the question number whenever you are answering. Gitanjali is saying A, Rahul is saying D, Jairam is saying B, Amit is saying CRR, Sheikh is saying D. See, all these are the monetary policy tools, yes or no? They are direct or indirect instrument of monetary policy. And whenever we want to decrease the money supply from the market, when what we are saying that there is inflation in the country. Whenever there is inflation in the country, what is the condition in inflation? First of all, we see there is more money supply in the market as much required. So because of the more money supply, the demand of public will increase and the supply of goods and services will decrease because there is inverse relation between demand and supply. Now next thing is the prices will increase because there is demand and supply are not equal. That's why the prices of goods and services are keep rising. That is known as inflation. Now we have to control this inflation. We have to reduce these prices. Now to reduce these prices, what we have to do? We have to decrease this demand. And to decrease this demand, we have to decrease the money supply in the market. And to decrease the money supply in the market, RBI has to formulate the tight monetary policy, which is also known as contractionary monetary policy. Okay, tight monetary policy is also known as contractionary monetary policy, in which RBI increases the policy rates, and these policy rates increment is known as your contractionary or tight monetary policy. So the right answer will be all of the above. We have to increase SLR, we have to increase CRR, we have to increase bank rate, then we will be able to reduce the money supply from the market, and then we will be able to control the situation of inflation in the economy. The right answer will be your D, not only A or B or C. The right answer will be D, because at any time whenever there is inflation in the economy, or we can say whenever RBI wants to reduce money supply from the market, then RBI make the tight monetary policy, and whenever RBI wants to increase money supply in the market, then RBI made the easy monetary policy, that is expansionary monetary policy. Okay, so the right answer for the sixth question will be your D. Next, when a bond matures, its maturity value is known as. When a bond matures, its maturity value is known as maturity value, second redemption value, third face value, or fourth coupon value. What will be the right answer? Now this is one of the previous year question which is asked in the exam. Yeah, if you want just for an experience, Gaurav, you can. Now, when a bond matures, its maturity value is known as A, B, C, or D. Now, those candidates who are live in the session, do like the session once. Seventh is B, redemption value. Vinay is saying A, that is maturity value. Ananta is saying D, that is coupon value. Confirm it can be coupon value. Coupon value is simply your interest in when we are giving interest. Okay, so in bonds, when we are talking about bonds, the interest amount will be known as your coupon value. It can't be the coupon value. The right answer will be your redemption value. At the maturity, what you are doing, you are redeeming your particular bond. The right answer will be your B, that is redemption value. Okay, right answer for the seventh question is B, that is redemption value. Now next is, when we are talking about bonds, bond is a debt instrument. Okay, what is bond? Bond is a debt instrument in which fixed maturity period or fixed rate of amount of interest or dividend will be provided to you by the company. Okay, and bonds are mainly issued by public sector undertakings. Now next is, which of the following statement is not true? Again the previous year question. Which of the following statement is not true? First, amount of bill is received by the payee. Second is saying drawee is the maker of a bill of exchange. Third is saying acceptance by the drawee is compulsory in usance bill. Before acceptance of a bill, the drawee is not liable on the bill. Now, which of the following statement is not true? What will be the answer of 8th question? So there is one information for all of you. Our session of PPB, Principles and Practices of Banking session, from tomorrow onwards will be at 6:15 AM. Okay, do remember the time now. The sessions we are continuing at 7:30 a.m. This session will be shifted to 6:15 a.m. daily from Monday to Saturday and from tomorrow onwards. Okay, so from 21st of April, the session will be at 6:15 a.m. Do remember the time, and do make sure you are attending the session at the same time also. Okay, B and C, we are getting two answers, that is B and C. See, we are asking about the not true statement. We are asking which of the following is not a true statement. So right answer will be B. Drawer is the maker of the bill. No, drawer is the maker of the bill. Who draws the bill? The drawer makes the bill. So the right answer will be the B, because the correct term which should be used here, it should be drawer. Now who is drawee? Drawee is bank. Drawee will be your bank, and now who is payee? Payee is the receiver who is receiving the money. Okay, so drawer issues the bill of exchange, or drawer is the maker of the instrument, and when it comes to payee is the receiver, and drawee is the bank. Okay, so right answer will be your B option, not A or C or D. Other three are the true statement, and the wrong statement is only B statement. Now, which measures are followed by the government for handling inflation? Rahul, this is a temporary time period. This is a temporary time we have changing because of certain issues. So after a certain time, we will continue at the same time, 7:30 a.m. It's for the temporary duration. Now, what will be the answer of 9th question? Which measures are followed by the government for handling inflation? Is it monetary measures? Is it fiscal measures? Is it controlling investment? Or is it all of the above? Monetary measures are taken by Reserve Bank of India. Okay, monetary measures are taken by Reserve Bank of India, in which RBI try to control the money supply in the market. When it comes to fiscal measures is taken by Government of India. When it comes to controlling investment, it is also done by Government of India in the country. Okay, so which of the following is are the measures which is taken by government for handling inflation? See, what question is asking? What question is asking? Which measures are followed by government for handling inflation? We are not saying that. We are not asking about what are the measures which control inflation. We are saying which of the following measures followed by the government for handling inflation. So the measures which is taken by Government of India to handling inflation is see, I have already told you, monetary measures are taken by Reserve Bank of India. Here we are asking about Government of India. So, monetary measures are taken by RBI, fiscal measures are taken by Government of India. Controlling investment, it depends on the different aspects. It can be done by government by taking the taxes, or we can say duties relaxation, by giving relaxation on taxes and duties. This is also done by the Government of India, but it comes under the fiscal measures, because the taxation system is decided by Government of India under the fiscal policy, under the fiscal measures. So right answer will be your B, because we are asking about government. We are not asking which of the following measures are used to handle the inflation. We are asking which of the following measures taken by or followed by Government of India for handling the inflation. The right answer will be B, because controlling investment is a part of fiscal measures. So right will be your B option, not D. Why you are all are saying that it will be your all of these? Monetary measures is only taken by Reserve Bank of India. Okay, now next. What are few risks banks are exposed to among the following? First is liquidity risk, second credit risk, third is interest rate risk, fourth is strategic risk. Now let me know what will be the right answer. Which of the following risks are faced by banks in the banking sector? A, B, C or D? First is liquidity risk. Now what is liquidity risk? When the bank is facing issues, when the bank do not have sufficient liquidity to perform its day-to-day transaction. Okay, when a bank is unable to perform its day-to-day transaction, that is known as liquidity risk. Why bank is not able to perform its day-to-day risk? Because bank do not have sufficient amount of cash, bank do not have sufficient liquidity. Now what is credit risk? Credit risk is the default risk, or we can say when a bank is provided loan to the customer and the customer is not repaying the loan, that risk will be known as credit risk. Now what is interest rate risk? Interest rate risk is the type of risk which we are saying that whenever there is a changes in the monetary policy rates, whenever there is a changes in the interest rate, then banks can face the interest rate risk. Okay, everyone is saying C answer. 10th is C. Confirm. Okay, so everyone is going with the C option. C. I have given you the explanation of all the three. Now what is a strategic risk? A strategic risk faced by banks also. And now why banks are facing a strategic risk? This is the simply we can say the bank is facing at the time of financial crisis, the strategy went wrong. When there is something wrong with the strategy, when the disrupt strategy was taken, when the disrupt assumptions were taken by the bank, will be known as a strategic risk. Okay, and Basel III mainly focuses on the strategic risk also. So when we are talking about that what kind of risk our banks are exposed to, the right answer will be your D, that is A, B, C, D. What is liquidity risk? I have told you, when banks is not able to perform day-to-day transaction. Why bank is not able to perform day-to-day transaction? Because bank do not have sufficient liquidity with itself. Now when it comes to credit risk, it is the risk of default in loans given by bank. When there is a risk of default in loans, that the bank has given loan to the public but public is not returning the loan, that default risk is credit risk. When there is change in the interest rate, then the risk will be faced by bank and it will be known as interest rate risk. Now what is a strategic risk? When the assumptions went wrong, when the strategy assumptions are wrong, or when the strategy you have made to make sure that you will have a better growth in the banking sector, and that strategy went wrong, now that will be known as your strategic risk. So banks are facing all the types of risks which is mentioned here. Apart from this, there are many risks, like for example, there is a market risk, there is a operational risk, there is a business risk. Okay, so these are the other risks which banks also exposed to. So the right answer will be A, B, C, D. All are the risks which our banks are exposed, and the strategic risk is the Basel III's main objective. Control this strategic risk so that the strategy do not, the strategy banks management is making do not go wrong. Okay, so Rahul got 6, Gitanjali got 7. What about rest? How much you have scored in this particular session? Now the term of the day which you have to study for the next class, that is Mudra Yojana. You all have heard about the Mudra, I know. What is the full form of Mudra? Do let me know what is the full form of Mudra. So do make sure what are term of the day we are taking. That is very important, because these are the conceptual terms I am giving you on daily basis. Do read these terms because they can be asked in your exam. And next thing, schemes are also important. The certain schemes are important to cover also. Okay, because you know the banking system is totally related with the government scheme, so they can ask question on the government scheme also. Now you have to cover what is Mudra, what is the full form of Mudra, when it was launched by Government of India, what is the main purpose of Mudra, what are the loan instruments of Mudra. Okay, you have to cover all these things. 6, 6, 7 or 6. Okay. Now important thing is the timing of our session changed for a temporary duration, that is from 6:15 early in the morning from tomorrow onwards. Okay, so do make sure you are there in the session. I know it's a bit early, but we can manage. We have only 1.5 months in our exam, so we can manage that. That's not a big deal. Okay, when you have decided that you have to qualify this exam in a first attempt, then this is not a big deal to come at 6:15 AM. Okay, so now if you are new to the channel, do subscribe the channel and press the bell icon so that you will be notified about all the sessions which are coming. on the platform of Officers Adda 24/7. And if you have not downloaded the application, then do download the application. You will find the quizzes here. Now, those candidates who are looking for a dedicated English medium batch for the preparation of June 2022 target, the batch started from 16th of April. You can visit the Adda 24/7 application and you will find the batch there. You will find two batches there, that is English medium, one with the Macmillan book and another without the Macmillan books. So the prices are different for both. Okay. So now to purchase this particular batch, you can use a code that is Y496. If you purchase from Adda 24/7 application, you will get 78% discount on the amount. Okay. So that's all for today. Let's meet tomorrow at 6:15 AM. And do make sure that you read all the terms which we are discussing, the term of the day. Okay. So do like the session if you like the session, and share with your friends and colleagues who are also preparing for JAIIB. Last but not the least, the registration for JAIIB June 2022 started from yesterday. Okay. Thank you all for joining the session and stay safe.